As per the loan covenants between banks, NBFCs, and borrowers, the borrowers are obliged to pay interest on the principal amount and pay the installments every month till the repayment of loan. If the borrower does not comply with the terms and conditions, such as not paying the EMI, the banks and NBFCs are authorized to levy penalty. Wide RBI 2015-16/59 DBR no.leg.bc 21/09.07.006/2015-16 dated 1st July 2015. RBI has empowered regulated entities, RAEs, to levy penal charges on the borrowers in the case of non-payment or delayed payment. But it has been noted by the regulator that the facility for penal charges is being used by some of the RAEs for profit-making instead of its originally intended use of promoting credit discipline. Responding to the concerns raised against the penal charges from customers, RBI has issued amendments to the extent guidelines on fair lending practices by banks and NBFCs. The Reserve Bank of India, RBI, has issued guidelines for RAEs, regulating the penal charges in loan accounts, times to inculcate a sense of credit discipline. Times to ensure transparency in the disclosure of penal charges and interest rates in loan accounts. The guidelines are as follows: penal charges, not penal interest. Times penalty, if charged, for non-compliance of material terms and conditions of loan contract by the borrower shall be treated as penal charges and shall not be levied in the form of penal interest that is added to the rate of interest charged on the advances. Times the penal charges in case of loans sanctioned to individual borrowers for purposes other than business shall not be higher than the penal charges applicable to non-individual borrowers for similar non-compliance of material terms and conditions. Times the regulated entities, RAEs, shall not introduce any additional component to the rate of interest and ensure compliance with these guidelines in both letter and spirit. Times the RAEs shall formulate a board-approved policy on penal charges or similar charges on loans. Times the quantum of penal charges shall be reasonable and commensurate with the non-compliance of material terms and conditions of the loan contract without being discriminatory within a particular loan product category. Clear communication with borrowers, times the quantum and reason for penal charges shall be clearly disclosed by RAEs to the customers in the loan agreement and most important terms conditions key fact statement, KFS, as applicable. In addition to being displayed on RAEs website under interest rates and service charges. Times whenever reminders for non-compliance of material terms and conditions of the loan are sent to borrowers, the applicable penal charges shall be communicated. Further, any instance of levy of penal charges and the reason, therefore, shall also be communicated. The guidelines will be effective from 1st January 2024 on all commercial banks, including small finance banks, local area banks and regional rural banks, excluding payments banks, all primary, urban, cooperative banks, all NBFCs, including HFCs, and all India financial institutions. These guidelines will not apply to credit cards. External commercial borrowings, trade credits and structured obligations which are covered under product-specific directions.